Okay, say you're welcome. So we are going to start with our book here. I'm going to give you the PDF. It is called Baby Pips. They have a wonderful website, so you can check it again. Okay. All right.
All right.
All right. So we are going to see first things first. This is the introduction to Forex. What is Forex? The foreign
Mm.
exchange market is also referred to as the Forex or retail Forex or FX or sport FX or just sport. It is the largest financial market in the world. So by this time this book was written, it was the largest, but it was not yet that large. By now, we suspect that in the Forex
Okay.
market, there is more than 50 trillion US dollars which is traded per day.
Okay.
So it's a very big market. Uh,
Yeah, I can see.
yeah, the cake is big for everyone. You can also enjoy it. So there is no need to be under pressure. There is no need to rush. I know why I'm saying this. You sometimes feel the pressure, feel the edge that I'm left behind. Let me make sure that I collect
Mm.
this and that. But no, you are never left behind. So our question
Okay.
number two is, so what is traded on the foreign exchange? So this one is a very, very, very important information that you should know, that you should master, that you should understand. So what is traded on the foreign exchange? There are a lot of things that nowadays are traded, e.g. for currencies. I'll teach you about currencies as well. We have what we call synthetic indices. If you come here, if you come here on this one, you can see their currencies, Euro, USD, what. Here,
Mm.
there are synthetic indices, jump 75, boom, crash, right? So there are different things that are traded on the market. We have also cryptocurrency, Bitcoin, Ethereum, USDT, whatever it is, Litecoin,
Mm.
Dogecoin, a lot of them. So we'll talk about all that later on. So a spot market is any market that deals in the current price of a financial instrument. That is what we call a spot market. In shona toti the musika unoitirwa ipapo ipapo. My bad. Like
Yeah.
sometimes when you want to make
Yeah.
an investment, you might need to go through a lot of channels and what, even on stock exchange. It is quite long, it's a lengthy process. But unlike on the spot market, if you are buying, you're buying. If you're selling, you're selling day and day. So it gives us so much flexibility. It gives us the ability to, to exit, to enter, to control our risk, you see. All right. So
Mm.
let me do this. Let me do this. There's something that I want to ask you. Are you fine if you continue this lesson in English, or we can tonyatsoita mushona handiti then rangu rekuzoisa paYouTube ndozogadzira hangu tutorial? Which one is better?
No, don't worry. We can continue in English. It's okay.
It's fine. Okay, because I was worried that maybe you may fail to understand some of it. Zapani pambodeko nyatsoda
No.
kushona chaimo chaimo mururimi rwaunonzwa.
No.
All right.
Vamugabe takaenda kuchikoro navamugabe.
That is good. That is good. So now when we come on the currencies market, we trade currencies. Okay, currency. This is we're talking about currencies from countries. National currencies. We have US dollar. Where you are, it's AED. Wow, what are they called? The currency. What is it called?
Uh, E E A E G dirhams.
All right, it's fine. Then in Europe, they use my Euro, Japan, JPY. So this is how a currency is formed. It's they check uh, the first two letters from a country like United States. They take the U and the S, and then the third letter is the name of the currency. You understand? So
Yes.
USD, it's United States, then dollar. Like for
Okay.
Zimbabwe, it's ZWG, or yeah,
G.
ZWG. That's Zimbabwean dollar. Yeah. So
Okay.
that's how currencies are formed. But they also have nicknames. They also have nicknames. Uh, like US dollar is called a buck. When you say give me $20, you're speaking deep traders lingua there. We have the
Yeah.
Australian dollar, it's an Aussie. We have the New Zealand dollar, it's a Kiwi. We have the pound, it's called cable. So these ones, as you go deeper into forex market, sometimes you may come across these terms. Just know that this is what they mean. So now on the forex market, they have a time, but I don't know. I think it's better that I channel you through the synthetic indices market first, then the forex market. All right. So on the synthetic indices, they don't have a time to trade. It's 24/7, 365. Okay.
Okay.
All right. So I want to talk about leverage. Leverage. All right. So leverage, most of our accounts, they have leverage. Leverage is a fee that you are given by the broker. It's like when you weigh 20 kgs, but then your teacher gives you a bag with stones, which weigh 50 kgs. So when you go on the scale, you are 70 kgs, but then originally you are 20 kgs. Do you get the sense?
Yeah. 20.
So brokers, they
Yeah, I
give
get
us,
it.
yeah, they give us leverage. Leverage is this is the money that they give us, so that, because the reason why we did not know about forex trading when we were growing up is because it was a closed deal. It was for people who are rich, people with money, because for you to trade, you need $10,000, $100,000 and for us people like me who are coming from the ghetto, maybe my father died without even handling $5,000 all at once. You see, so there is no way I was going to get 10,000, $100,000 to trade. So a broker, they enter a deal with you, they give you leverage. Their leverage, they give you like 1:100. It means that on every dollar that you deposit, the broker then turns your money into 100 times more, which means $100. So when you go on the market and you make $50, just to say 50 times 100, which means the broker would have made 100 times more than you've made. Or if you make a loss, the broker also loses 100 times the money that you have lost. So it's a win-win situation. All right. So the thing that you need to trade forex, internet, all these things, we have them covered. All right. Now we are going. We are going. All right. You need to know these words. They are very important. Long means going buy. Short means selling. Bull or bullish, it means that is going up. Bear or bearish, it means that is going down. Okay.
Okay.
All right. I hope we have your notepad with you.
Yeah.
All right. So whenever you open a broker account, did you do brokers? I think I'm going. We need to talk about brokers. So what is a broker? The broker is the middleman between you and the forex market. You see, we use the broker. We send the broker. We trade uh,
Okay.
using a broker, and then the broker delivers our transactions on the market. So the broker gives you account options, and my favorite account for now that I want you to use is called a demo account. A demo account is a practice account. It has
Mm.
all the features of a real account. The only difference is on demo account, the money is virtual, is fake money. On a real account, the money is real. That is the only difference. Otherwise, everything else is the same.
Okay.
Yeah, so when you begin to trade, you start on a demo account, and then you then grow up later, which is okay. So we're going to talk about a pip. We are just going to do it randomly. All right. So a pip, a car's speed is measured in kilometers, right?
Yes.
50 kilometers per hour, 60 kilometers per hour. So that is the same with the market. It is measured in pips. The distance that it moves is measured in pips. So that's what is called a pip. Then let us go to a lot size. I think it's better that I use also the practical one. Let's go. Let's be practical. So can you see my
Okay.
screen? Do you see my platform?
Yeah, yeah, I can see it.
All right, that's fine. Okay. So we are on Euro USD, right? So what we call a lot size. Okay, let me teach you about the platform. I think that's better, right? So this is what we call
Okay.
metatrader 5. Do you see it? Do you see a platform? Do you see my platform here? I don't think you can see it. You will not see
Like,
it. Okay,
where it's written, what is the, yeah, it's now,
right. You can see my platform, right?
yeah, where there is
Yeah,
1.11 or what?
right. So what you are seeing here, uh, of course, our system, the UN FX strategy, is the one that is displaying all this. Let me remove it so that you can be able to note the difference. Now, this is what the chart looks like without our system now. This is how you see it without the system, right? So
Okay, the way it is.
yeah, so on this platform now, this is MetaTrader 5. After you log in, you are taken to a chart. This is what we call the main chart. This thing that I'm moving, you see it.
Okay.
All right.
Yeah, I
And
see it.
all right. So let me start. I want to teach you about these things. These are the most important. Where I am right now, do you see this M1, M5, M15, M30?
Yes, H1, H4.
Okay, these they are called time frames.
Okay.
They are called time frames. They are the most important tools when you are analyzing. Most important
Okay.
tools. I'm going to teach you more about them. So let me come here first. You see these lines? Do you see a change now?
Yeah.
You see the change?
Yeah, I see a change.
Do
Yes.
you see the change now?
Yes.
You see the change now. So this one
Yes.
is called a line chart. This is the chart. This is where you see what is happening on the market and you make a decision either to
Okay.
buy or to sell. This is where you see everything. So
Okay.
it's called a line chart. And these ones, they are called bar chart. You see, they are called bar charts. It's called a bar chart.
Okay. Okay.
They serve the same purpose with a line chart. And these ones are called Japanese candlesticks.
Okay.
And they are the ones that we use to analyze the market. They have many advantages that I'm going to teach you about. First advantage about the Japanese candlestick is that they give you more information. They tell you a lot about what is happening on the market, unlike the line. You see the line here, and this budget,
Hmm.
they don't tell you more about the market. I think
But what is happening?
the candlestick lesson is another lesson that we're going to make. But now, the candlesticks, the blue candlestick, according to how I've set it up, sometimes they are blue or green. The blue candlestick means the market is going up, and you need to write this down. Blue candlestick means the
Hmm.
market is going up. And in forex trading, we buy when it is going up and we sell when it is going down. We buy when it is
Okay.
going up and we sell when it is going down. And guess what? The forex market only goes in two directions. Either it is going up or it is going down. So it's either you're buying or you're selling. They have only two directions, up or down.
So we buy when it's going up,
Up, yes. And we sell when it is going down.
sell when it's going down.
Yes. So blue
Okay.
candles are for buy, red candles are for sale.
Okay.
Yes.
So all along I thought maybe you buy when it's down, then you sell when they're up.
No, but most people they thought it goes like that, but it is actually the opposite with the normal order in the world. Like when the rand is falling, then you start to what, you know. All right. So now you have to know you buy. So after uh the candlesticks, each candlestick it works with this time frame. The candlestick represents what happened or what is happening in the period of the time frame.
Okay.
So when you are on H4, it means that we are saying every candlestick here is representing 4 hours of activity.
Okay.
So if we come to this candlestick, you can see that we are saying that it was in buy, which means the Euro USD was buying the whole morning. It was in buy.
Mm.
Yeah. And then if we come on this one, do you see where my mouse is?
Yeah, the red one.
Yeah, it means that it was selling heavily. So if you press buy when it is selling like this, then it will take money from you.
Okay.
It will take.
So I wanted to ask,
Yes, sir.
we say the blue candle, right? When it's
Yes,
going up, that's when we buy. And
yes,
then when it's going down, that's when
yes,
we sell.
yes, sir.
Uh, How about the red? How about the red one, which
It
you
is the
said it
red
was
one, all
selling
right.
the whole morning?
So when the blue is going up, you buy. When the red is going down, you sell. The blue never goes down. The reason why it's blue is
Okay.
because it is going up. If it goes down, then it becomes red.
Okay.
Yes, if it goes down, then it becomes red. It is blue because it is going up.
Okay, now I get it. So the
Yes,
blue one, that's when we buy.
yes, sir.
Then then if
Red
it's now
one,
going down,
we
it
sell
turns
it.
to red. Then we know.
Yes,
Okay.
yes. So you learn a lot about how
Okay.
to
Okay.
know if a blue candle is coming. That's where I come in now. That's where all my experts
Okay.
ukoshwa wangu wese ndo paunouye pakuzoziya kuti is
All
going
right. All right.
it's going to give you blue, it's going to give you red. Because you don't have to take the trade after there's a blue candle. We take it before there is a blue candle.
Okay.
That's the skill now. Because if you take it when there's a blue candle, you see here on this one, it went up, then now it is seeming like it want to come down or what. It's still confused. There's no proper direction. So if you took the trade after this
Okay.
blue one, you can be in a minor loss.
Yeah, I get it.
Yeah. So each and every time frame, it displays different things for you. You see, this H4, it means 4 hours. H1, it means 1 hour. M30 is minutes, 30 minutes, 15 minutes, 5 minutes, 1 minute. D1, 1 day. W1, 1 week. MN is 1 month.
1 month.
So you see how if I come here, now it is showing me completely different things. Can you notice?
Mm.
If I come here,
Yeah.
completely different information. If I come here, completely different. If I
Different.
come here, totally different. If I come here, you see now, on this small time frame, it is more in sell than in buy. But on H4 here, it is
Okay.
more in buy than in what? In sell. So
You
time frames,
say.
they matter. You analyze on them. We use them to analyze and to make decisions. So the bigger the time frame, the more rewarding is the trade. A trade that you take on 5 minutes
Okay.
time frame, it pays you less money than the one you take on 30 minutes time frame. Because the bigger
Okay.
the time frame, the bigger the picture. Remember, your ultimate goal is to trade the bigger picture. So the bigger the time frame, the bigger and the clearer is the picture.
Yeah.
All right. So now from there, do you have any questions pertaining this candlestick and the time frames? Do you have any questions? Because we want to go to another part.
No, I'm okay.
Right. So now we come here. You analyze then. After you've analyzed, you then want to take a trade. Right. There's what you call a lot size. Lot size, LOT size. Lot size, this is the amount of money that you are willing to risk per trade. Hello?
Yeah, I'm here.
Okay. This is the amount of money you are willing to risk per trade. So this is 0.01, 0.02. I always encourage you to practice maximum risk management. What is risk management? Forex trading is a very risky business, a very risky job. So you have to make sure that you minimize your losses by practicing risk management. Risk management, what is it? It also involves of using the smallest lot sizes available according to your capital. So what is a lot size? This is the amount
Okay.
you are willing to risk per trade. Okay?
Yeah.
Right. So like in this case, 0.01, it means you are willing to risk 10 cents per pip. Remember, I talked about pips. So imagine when you say per kilometer, you are paid 10 cents per kilometer. So if you move 50 kilometers, then it's 50 times 10 cents. It's $5, right?
Yes.
Then you are
Yes.
paid your bags. Or if you go in reverse, you lose that $50, that $5. So after you analyze, like in this case, let's say we have analyzed and we have results, and then you can just press sell. Let's say we want to sell it. When you press sell, you see you can shift here and you place sell again. Then when you press a trade here, of course this line appears, but your trades, they start to appear from here. Down here, you see this box,
Okay.
Euro
Yeah,
USD.
with the blue one.
Yeah, so here
Yeah.
there's Euro USD. That's our symbol. This is the time that you opened it. This is your ticket number. Type of trade, sell volume 0.05 and 0.01. So price, these are the prices. They don't matter very much. But if you come here, do you see where it is written profit?
Yes.
Right. Do you see that the loss? Okay, a red color means you're in loss. Blue color means you're in profit.
Okay.
You see, so these ones they
Okay.
are profits, but these ones they are losses.
Or the one
But then,
that is a negative.
yeah, the negative, good, the negative one. So, but there's something that is surprising. I took this trade at the same time, but they have different losses. Why is it like that? What is causing the difference?
Isn't it because of time frame?
The lot size. Here, where it's written volume.
Oh,
This one is 0.05 and this one is 0.01.
5.
You see?
Okay, so when you increase,
Yes, it means more
yeah, I
profit
think.
or more loss. Now let me do this. Let me put another big
Okay.
lot size. Do you see what is happening now? You see, let us give it a
Yeah,
little
it's
time.
now.
Let's just give it a little more time. You see what I'm talking about. So now, if you come here, do you see this one? Where it's written balance. Do you see where it's written balance?
Yes, balance trade.
Balance is the money that is in your account.
Mm.
That is the money in your account. Then after balance, we go on equity. Do you see equity? Here.
Yes.
So equity is the money that remains in your account after you close the open trades. So you always notice that balance doesn't move always, but equity will be moving always. You will notice that.
So why is it equity move?
It's because equity is the money that you remain with after you close. So equity is your current balance after closing the trade. So equity is affected by the total trade. So as the trade moves here, it affects down here on equity. So if I close this trade, this equity will turn into the balance. So that's why it moves up and down. Okay. Now, after equity, we go on margin. We go on margin. Hello.
Hello, I'm here.
Okay.
I was just checking on those ones.
All right. So after equity, we go on margin. Margin, whenever you take a trade, even if after lot size, there's a money that the broker holds for you. It's called margin. So your margin also affects your equity. It also affects your equity. Then we have free margin. This is the money that you are left with that you can use to open trades. Okay? That's free margin. Then we have the most important of them all. It is called the margin level. Margin level should always be your friend. It's a very, very important aspect on the market. You have to respect it. Let me just always make sure that all right. Always make sure that your margin level, it's in percentage form, remains or it is always above 100%. Because if you go below 100%, it turns into red. And red is a color. Red means danger. And when the market is telling you danger, it is telling you that you are going to lose money. And when margin level reaches 53%, the broker feels pity for you and it starts closing trades for you. And when the broker starts to close trades for you, my brother, it means that you start to lose money. Up to an extent that if your account was having 15,000 US dollars, you only see 0.01 cent. Even if your account had $1 million, you see zero. Zero. Yeah. That's what you call blowing account. Would say that you have blown your account, you have lost money on the Forex market. Now when we come back to our trades, we took these trades at the same time, right? But you can see that the one
Yes.
with the bigger lot is now paying us $4.35, and then the second one is
Mm.
paying us 40 cents. But the one with the smallest loss is paying us only 0.09 cents. That is the difference.
Okay.
But then, as the way it is paying us, if you were having a loss, that is how we could have lost money. So you could see that the one with the small lot size will be losing 13 cents, but the one with the 0.15 would be losing $4.80 already.
Right. Yeah.
And that is a problem now. That would be a very big problem. If you check the trades that are
Mm.
below it, they are all NZD card. This one, it is $26 profit. The one with the 0.01, and the one with the 0.50,
Uh-huh.
it is $403. That is the impact of lot sizes.
Okay, so
Mm.
lot sizes, in short, they can work hand in hand with time, right?
Yeah, but they work hand in hand with balance.
Mm.
Because if you have a small balance, then you can't use big lot sizes. Because if you use them once,
Okay.
then they can take all the money. So you need to be careful.
So the trick,
Huh?
so the trick is putting more when you are sure that it's going to go high.
Exactly. That's the
Okay.
whole idea. But always make sure that you don't put too much.
Yeah.
Mhm. Okay. Um, lot size. So on introduction to Forex and MetaTrader 5, I think the most basic things we are done now. Did
Okay.
you manage to log in into your MT5 on computer? Did you manage to log in?
No, I don't have my Wi-Fi is still giving me problems.
All right, it's not a problem. I can see that now it's time. Our time is up. Um,
Yeah.
what we are going to do is we are going to continue with our lessons. But now the thing is, we have moved so much today.
Yeah.